Hey traders, happy Sunday. This is Ron Haight. Hope you guys are doing fantastic. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with daily charts of the majors. The diamonds is on your screen right now. We were up a little bit on Friday, finished up for the week. The Dow right now is at its 200-day SMA, which is that purple line. That is an institutional moving average. We got above the 50. Close to the 200, came back down, back tested the 50. Now we're back up here at the 200 again. This is all still bullish price action. As of right now, once we close above that purple line, which is only pennies above where we're sitting right now, the target of that little mini double top, if you will, inner double top around 260 would be the target, because that was the range. And I said, once we lose this range to the downside, it could be selling could accelerate. It's exactly what happened. Well, now when we get up into here, we got to chew through all this. This is now considered overhead supply. We get above that, 260, then we go right up here, and then you're talking about new highs. I mean, it's pretty incredible where the market was back right before Christmas on Christmas Eve. If we take a look at the spiders, the S&P ETF, this is a daily chart. We're not quite to the 200-day, but we are now getting up into the old trading range, so we're chewing through this overhead supply. If you think about it, why it's called overhead supply is people might have been buying the dips here, and then when you sell off, whoever didn't sell, as the market comes back up there, they might say, hey, I didn't sell a month ago, but gosh, I'm happy to have my money back right now. Maybe things are still a little sketchy out there. So you got to chew through all this. Right now, upside target 200-day, which is around 271. That would be about 60 points on the S&P higher. $5-6 on the SPY. Then you go back to the previous top, which is 280, and then it's back up to 290 as the upside targets. The Qs, we zoom in a little bit. They sort of finished the week unchanged, if you will, but target 200-day here, and then these are just ever so slight lower highs, so it's not like the S&P and the Dow where they were just, evenly across. Here you got this high, so you just want to go, okay. Looks like 172, then it's 175, then it's 177. You get the idea. Now, from a trailing stop perspective, or from trying to gauge what are the bulls doing, the 20-day EMA here in red is not perfect, as you can see, but it's a really good indicator to test the sentiment of the bulls and the bears. As long as we stay above the red line, which is the 20-day exponential moving average, the bulls get the edge. We get below it, that's when the yellow flags start coming out. So I'm not necessarily worried about, oh my goodness, the Qs were down $4 or something, let's say on Monday or Tuesday. We get below the red line, and that's what starts shifting it away from bullish to neutral and even towards the bears. And if I bring the SPY back in here, just real quick, you can see the 20-day here in red would be a key marker. And what's interesting on the SPY is the 50 in orange and the 20 in red are both together. They're coagulating at 260. We get below both of those, then boom, you just go back. Frankly, the lows would be the big target, but this little swing low from the 3rd of January would be a target as well, but that would be the big one. But right now, it is bullish on the daily charts. Now let's take a look at some stocks I was looking at this weekend. Here is McCormick and Company. This stock got taken out behind the woodshed on Thursday, tried to rally a little bit, finished up near the highs of the day, but gosh, it was still at basically going from 140 to 1.25, and then it lost another 4 points on Friday. There is support at 115, $6 lower. Below 115, you're going down to 105. Still substantial downside targets here technically. And always keep in mind, when you see a stock that's just going up, and it's staying above a key moving average, which the orange line is a 50-day institutional moving average, simple moving average. You get below it, it's telling you, buying and selling wise, because the price is coming down, the bulls are losing their edge. The sentiment is changing. And then we went sideways, basically into like a bear flag, right? Flagpole, flag, earnings, pop to the downside, or I should say drop to the downside. You were sort of being warned when this happened, and that's why protective puts in front of earnings can be incredible lifesavers, capital savers. Here is Lear, LEA. We haven't looked at this in maybe ever. Stock, really long downtrend, really couldn't get above the 50-day. Finally started to do so on a spike in volume earlier this month. And now it just had blew up on Friday. Well, earnings was at 6 a.m. on Friday. So nice volume pop, moved higher. The 200-day is around 164. So, you know, it's only $6 higher, right? That's not huge. But if I zoom back out, this was such a slow death, if you will. There's no major resistance. I mean, maybe up in 185 to 190. That is substantially higher from a technical perspective. And you're also going to see a lot of charts right now exhibiting almost like inverted head and shoulders type patterns. They're a little crooked, but there's a lot of stocks out there doing this right now. Here's Overstock. This was a darling with the whole Bitcoin. It was a bit of a joke. Overstock went from in August 15, now you're talking August 2017, not last August. Goes from around 15, and by January 18, a year ago, it went to 90. That's a pretty big return. Since then, it's back down at 15. But just from a technical perspective, we got a pop, big volume, cleared the 50-day SMA in orange by a lot. There's a little bit of a shelf resistance here, which sort of stopped the stock, I think, on Friday at 20. The next one is 25. Hey, that's 20% higher. And then it's back up into this area. So from a technical perspective, there's a lot of upside targets. Fundamentally, not saying it's going to get there. Just a technical perspective. A 20-day EMA would be something I would consider as a trailing stop here. And remember, these are all for educational purposes only. And it's fantastic to learn and play in a paper trading account. There's no risk. Here is Square, another stock that had a bit of a Bitcoin run, but this one just kept on going. It cleared the 50-day. I talked about this a couple days ago with you guys. If I zoom in here closer, we got above the 200 on the 17th, back test the 200 on the 22nd, which would have been Tuesday, and now we're launching. A little bit of resistance right here. It's not much, around 82, then the previous highs are the target. A lot of stocks looking good, and look at Square's volume here since it shifted gears. The black bars, which are the up days, are beating the red bars in a big way. How about JD? This stock was at 45 bucks over the summer. Then it's down at 20. It's like, hey, half price sale. It doesn't actually work like that, but what I'm seeing here is a nice rounded bottom. Attempts to sink it, which we're unable to sink. And now, if you look, once we got below moving averages, we basically stayed below the red. Then we hit the orange, can't get above it. Hit the orange, can't get above it. Hit the orange, really couldn't get above it. But then what happened here? We break above, back test, break out, try to break out again, back test, back test, back test. And now we're pushing higher. The immediate target right now is the 200-day moving average, which is at 30 bucks. That's 40% higher or so. And that comes in with a little bit of a gap here. I would consider the 20-day EMA as a potential trailing stop, but I love to find stocks that had long downtrends. They make sort of a rounded bottom, then they start breaking out and the volume spikes, which is what I'm seeing here on JD. Just one more to follow. Here is MDCO. This is the medicines company. Stock was at 40 in September, 50% haircut in a couple months, pop above the 20-day. Volume was good. 20-day EMA as a potential trailing stop, upside target. The way this thing fell, 200-day. That's almost, what, 50% higher? Again, purely technical. I don't follow these stocks fundamentally. Here is CLF, which is Cleveland Cliffs. Popped the 200-day today. Target probably up there around 11. So this is a cheap stock, 960 to 11. That would be like a $96 stock going to 111, and then back up here. However, profit charts on Thinkorswim is saying there's an earnings report on the 8th of February. It's about 10 days out. So there's not a whole lot of room here for it to run, but right now it's on the move. And then there's a bunch of stocks that are moving from a seasonal perspective. I know I told you guys about them. Here's Domino's Pizza. This thing is shot out of a cannon since it got above its 50-day. Micron just started moving. This one started popping the last 2 days. And then, of course, Netflix was, I said, watch the calendar, right? January 2nd, an explosion, it pulls back, and now we're rolling higher. So seasonal stocks are doing well right now too. You really need to be aware of those. And when stocks typically trend up and trend down, that's when the big money is pushing them, and that's what seasonality is all about. So with that, I'm going to wish you guys a great week ahead. I will see you in tomorrow's video. Take good care. All the best.